Have you ever wondered what people mean when they talk about the stock market? Imagine a huge, bustling marketplace, kind of like your local Sabzi Mandi. But instead of buying vegetables, people are buying and selling tiny pieces of big companies. These tiny pieces are called stocks or shares. When you buy a share of a company, let's say a famous biscuit maker, you actually become a small owner of that company. If the company makes a lot of profit by selling more biscuits, the value of your share goes up. This amazing marketplace in India is mainly our Bombay Stock Exchange and National Stock Exchange. It's a place where dreams and ambitions are traded every single day, from Monday to Friday. And you know, it's not just for big businessmen in suits, it's for everyone. So why should you, a regular person, care about this? Because the stock market is a mirror of our country's economy. When Indian companies do well, it means more jobs are created, more products are made, and our nation grows stronger. By investing in these companies, you are not just trying to make money for yourself. You are actively participating in India's growth story. You are providing money or capital to these companies so they can build new factories, hire more people, and create better products. Think about the phone you are using, the bank where you keep your money, or the car you see on the road. Most of these are made by companies whose shares are traded on the stock market. Let's take a simple example. Remember when you were a kid and you saved your pocket money in a piggy bank? The money just sat there. Now, imagine you used that money to help a friend start a small lemonade stand. When your friend made a profit, they shared a small part of it with you. That's exactly how the stock market works, but on a much larger scale. You are giving your savings to companies, and as they grow, your money grows with them. This is much better than letting your money sleep in a bank account, where its value slowly gets eaten away by something called inflation. The market gives your savings a chance to work as hard as you do, helping build our nation. This connection to India's growth is what makes the stock market so powerful for the common person. It is one of the most accessible ways to build wealth over the long term. You don't need a lot of money to start. You can begin with an amount as small as a pizza treat. The journey from being just a consumer of products to becoming an owner in the companies that make them is truly empowering. It changes your perspective. Suddenly, you start noticing which new roads are being built or which new apps are becoming popular, because as an investor, their success becomes your success. It's a beautiful way to connect your personal financial goals with the progress of our incredible nation. The year 2025 has been quite a roller coaster for the Indian stock market. Think of it like a cricket match with lots of ups and downs. One of the biggest events that shaped the market was the central government's budget announcement earlier this year. The government decided to spend a massive amount of money on building new roads, bridges, and railway lines. This is called infrastructure spending. When this news came out, companies in the construction, cement, and steel sectors saw their share prices jump with joy. Investors became very excited because more government projects mean more business and more profits for these companies. Another major event that sent ripples through the market was the Reserve Bank of India's decisions on interest rates. Interest rates are like the cost of borrowing money. Earlier in the year, to control rising prices or inflation, the RBI had kept interest rates a bit high. This made borrowing money expensive for both companies and individuals. But recently, with inflation showing signs of cooling down, there have been whispers that the RBI might start cutting rates. Even the hint of this happening made the market very happy. Lower interest rates mean cheaper loans for companies to expand and for people to buy homes and cars, which is great for the economy. Let's not forget the story of technology and startups. India's tech boom is a story we all know and love. This year, we saw a few very popular digital startups finally decide to sell their shares to the public for the first time. This is called an initial public offering, or IPO. Imagine your favorite food delivery app or online payment app becoming a company you can invest in. These IPOs created a huge buzz, especially among young investors who use these services every day. While some IPOs did spectacularly well, others faced a reality check, teaching investors an important lesson that not every popular brand makes for a great investment right away. Finally, we cannot ignore the monsoon. In India, a good monsoon is like a blessing for the economy. A large part of our population depends on farming. A good rainy season means a good harvest, which puts more money into the hands of our farmers. When farmers have more money, they spend more on things like tractors, seeds, and everyday household items. This boosts the sales of many companies. This year, the monsoon has been normal so far, which has brought a sense of relief to the market. A bad monsoon can cause a lot of problems, so everyone, from farmers to investors in Mumbai, keeps a close eye on the weather reports. In the big stock market family, some members are doing exceptionally well right now, while others are facing a few challenges. Let's talk about the shining stars first. One of the brightest sectors in 2025 is renewable energy. With the whole world, including India, focusing on fighting climate change, companies that produce solar power, wind energy, and build electric vehicles are seeing massive growth. The government is giving them a lot of support through new policies. This has made investors very optimistic about the future of these green companies. Their stocks have been performing like star players, hitting one boundary after another as they help build a cleaner, greener India for all of us. Another sector that is buzzing with energy is India's own manufacturing. For a long time, we imported many things from other countries. Now, with the Make in India initiative gaining serious momentum, that is changing. Companies that manufacture electronics, defense equipment, and even toys right here in India are doing very well. This is also helped by global companies looking to set up their factories in India. This shift is creating millions of jobs and making our country a global manufacturing hub. As an investor, this sector is exciting because it represents a fundamental long-term change in our economy. It's a story of self-reliance and strength. On the other hand, some sectors are going through a bit of a tough time. The information technology sector, which has been a champion for many years, is facing some headwinds. Big economies like the United States and Europe are growing a bit slowly, which means their companies are spending less money on IT projects. Since our Indian IT companies get a lot of their business from these countries, their growth has slowed down a bit. It's like a star batsman going through a patch of low scores. However, these are strong companies, and they are adapting by focusing on new technologies like artificial intelligence and cybersecurity, so a comeback is always on the cards. Similarly, some parts of the consumer goods sector, especially those that sell non-essential items, have seen slower growth. When prices of essential items like food and fuel go up, families tend to cut back on spending on things like fancy clothes or expensive gadgets. They focus on their needs rather than their wants. This has impacted the sales of some companies. It's a reminder that the stock market is dynamic. Not all sectors perform well at the same time. Understanding these different trends is key. It helps you build a balanced investment portfolio, like having different types of players in your cricket team for different situations. So, you're excited and want to start investing? That's awesome. But where do you begin? The first step is not to download a trading app, but to gain knowledge. Read simple books, watch videos from reliable sources like us, and understand the basic concepts. Learn what words like Sensex, Nifty, mutual fund, and SIP mean. Think of it like learning the rules of a game before you start playing. You wouldn't want to run onto a cricket pitch without knowing the difference between a bat and a ball, right? Spending a few weeks just learning will give you the confidence you need to take the next step in your investment journey. Don't rush this process. Once you feel a bit more comfortable, the next step is to get your documents ready. You will need a PAN card, an Aadhaar card, and a bank account. With these, you can open a Demat and trading account. A Demat account is like a digital locker where your shares are kept safely. A trading account is what you use to buy and sell those shares. Many banks and trusted brokerage firms offer an easy online process to open these accounts. It's much simpler than it sounds and can often be done from your smartphone in less than 30 minutes. This is your official entry ticket into the world of investing. Now for the most important advice for a beginner: start small and think long term. Please do not put all your savings into the market at once. Start with a small amount of money that you won't need for at least the next 5 years. The best way for most beginners to start is not by buying individual stocks directly, but through something called a mutual fund SIP. A systematic investment plan allows you to invest a fixed small amount, say 500 or 1000 rupees every month. This money is then invested by experts into a basket of many different stocks, which automatically reduces your risk. It's like buying a mixed fruit basket instead of just one type of fruit. Finally, be patient and disciplined. The stock market will have its good days and bad days. Don't panic and sell everything when the market goes down. In fact, when the market is down, your monthly SIP is buying more units for the same amount of money, which is good for you in the long run. Don't check your investment value every single day. Investing is not a T20 match, it's a test match. It's about building wealth slowly and steadily over many years. Your goal is not to get rich quick, but to get rich for sure. Welcome to the world of investing. It's a journey that can not only make you wealthy, but also make you a partner in building an awesome India.